back to Royal Blu FX. In today's video, we're really just going to talk about the trades that I've taken on US 30. This is going to give you an overview of pretty much how I trade every single day. I'm an intraday trader, so I don't technically hold trades throughout, for 3, 4, 5 hours out of the day, or for a few days or weeks or months. So I only just trade. I'm pretty much in and out. I trade in the matter of like minutes and so forth. So yeah, so let's continue with let's start with this. Okay, so what I did over here, normally I typically look at the 30-minute, and I saw that we had a demand zone here that price actually hit. Now, whenever you're looking at the market direction, always look at the higher time frame, obviously. And my higher time frame is 30-minute. Now, for some of you, higher time frame is maybe 1 hour, 4 hours daily, weekly, But for me, it's typically the 30 minutes. Sometimes I'll be on the 4 hour, just to kind of get a glimpse of what's happening on the higher time frame, and then I go back to the 30-minute. So the 30-minute is really important because if I toggle these sessions on like this, you'll see that each pink zone is the New York session. And so when you see the New York sessions, you can see how much price moves within each session. I mean, you can just see here, obviously, look at this. Price moves impulsively bearish, price moves impulsively bullish, right? You get these sharp moves to the upside, right? It's very impulsive, right? You can see that. So my job on the 30-minute is to find out, to understand that price is not going to move beyond the 4-hour time frame. So if I'm intraday trading, I must be on the 30-minute to find out where the next supply or demand zone is, and see where the PLT PHT is within our supply and demand. Okay, so having said that, today is Thursday, and we were focusing on price here. Now, I obviously was the funny thing is I was actually sleeping, which is very bad. I know it's not a motivating talk that I'm giving right now, but normally I have this strategy called the one shot, one kill. Essentially, what you're doing is you're taking one trade in the day, and it's taking one shot, right, one entry, and then you kill it. And that typically happens to be the time and price. Okay, so time and price is essentially when the sessions open at a certain time, right? And then you look for your supply or demand and your PLT PHT, and you enter from either the supply or demand zone after the PLT or PHT has been swept, and then you enter, and then price continues in the direction that you're going for, right? So in this case right here, you can see this is Thursday right here, Thursday the 4th. You can see it's 9:30 a.m. New York time. This isn't a trade that I actually took. However, I was sleeping at the time, like I was mentioning. So actually, let's go back on the 30-minute. So if I was interested to trade, or if I was interested in trading this, I guess waking up at that time or before 9:30 would be ideal for me to enter here, because if you zoom out, this is a major demand zone. Now, why is this a demand zone? It's because you can see there was some supply here that failed, demand took over, supply failed again, demand took over. So in this case, I go from the side, from the far left over here, and I span this across like this, like the the zones. I want to identify where the last supply was, which was right here, okay, and then look over here to the right and see where the next supply zone that is responding to the previous supply zone, which was here, right? And how is it responding? If supply failed and demand took over, then I must be buying. I must be looking for buys, right? So obviously and evidently, you can see here that supply actually failed while demand took over. Supply also failed there again, took over. And the way we do this is we mark the supply zone, the previous supply zone like this, right? And then we look to the far right and see, was supply able to break the low right here, right? If it didn't, then this means this is a flip for us. So price flips from bearish to bullish. That means demand is in control. So once we understood that, we go all the way here to the far right, right? We take our demand zone and we go to the far right, and then you now need to wait for your either chalk boss, but what we essentially look for is a weak supply or weak demand. In this case, we were looking for a weak supply because we know it's not bearish anymore, price is going to be bullish. And so therefore, hence this area where price took off from, right there. You can see that demand was, in fact, in control. If I could, let me just take this off here and so you guys can see what I'm talking about right there. Okay, so before all this happened, I would have still told myself that this is a demand, okay? We're looking for buys here, not sells. And the reason for that is because we have a huge demand zone holding here. And what I'm doing here is I'm monitoring how supply and demand is interacting with each other right in this area. You can see here that there's our supply zone right there, right? It's this one right here. So if you look to the right, you can see again, we had a failure of supply, demand took over, price came back and mitigated here, and price is taking off again. Now we see another supply zone that tried to go bearish, to try to break this low, but in fact, price just pushed bullish. It pushed bullish, which now tells us that demand is strong here. Supply is weak, so demand is strong. So if I was here at that point in time, I would be down here at this very low, right? And then just wait for 9:30. Now, right now, if you look at my crosshairs, the crosshairs right now, it says 9:27 a.m., which means now there's 3 minutes for the clock before price opens up, right? So what I would do technically is before when 9:30 comes over, right, I would count it down. I have a countdown timer from 30 seconds down to 0 before 9:30 opens, and once it does, then I strike, knowing that price will hold here for price to continue. Now, why would I be entering here? Because again, we had a weak supply zone here that took place and price flipped, and that means price now is going to come here to test this low, which is essentially, you know, all this demand zone here, and then we're going to take off. So when I play this, right, notice how price reacts quite aggressively, you can say, right? And I would use my 50% Fibonacci's, right, and go at the 50. I usually like entering at the 50, below the 50, because price usually tends to go down to the 50 more times than not. This is more of a, I'm trying to be more safe here, okay? I'm trying to control risk a lot here. And this is what you need to do a lot, is to understand how to control risk, to tighten up risk, to not lose much money in the markets, because a lot of us tend to just, you know, over risk by entering somewhere there, right, and say, okay, well, now this is my whole zone, and I'm just going to enter here as soon as price taps the open of the zone, right? Which may be favorable to a lot of people, but to me in particularly, I like to limit as much risk as possible. That means cutting the zone 50% of the way like this, and then entering like this, because now I have much more of a, well, let's just say this, if price did go against me, I would only lose a little bit, right, compared to the other traders who would enter here like this and they would lose more than I. So if we compared apples to apples, right, you would see whose apple is more better than the other one, right? Which one's more shinier, maybe, I don't know. I don't even know if I'm making sense, but what I'm trying to say is in terms of numbers, right, let's say we both, me and another guy, had $100 to start with, right? He risks this much, right? Obviously, let's say he lost, you know, whatever, $50, right? But I lost only $20, right? I would still be ahead of him, right? If I entered here, I would still be ahead of him. So if he lost 50, I lost 20. That means I'm still $80. I still have $80 in the account. He has only $50 in his account, right? Which means obviously I'm still in favor of winning or having more times to trade, right, rather than him, because he's more aggressive, right? So that's why I do the 50%. That's why I always enter from the 50% EQ, and then leave the risk just a bit below, just so price doesn't go below to sweep, you know, other liquidity, because price does that at times. Okay, so let's continue. So I entered there, right? But now I obviously didn't enter this although this is what I would have done had I been awake at the time, and then go right up here to the supply, to this supply zone, because this is our next major supply zone here. And then this is where my first TP would be. What I'm trying to do is I'm not trying to over trade, right? I'm not trying to take as much, to try and be greedy, I guess you could say, right? I'm not trying to be greedy by saying, okay, I'm going to target here or whatever. What I'm trying to do is only trade and capture trades that are bite sizable, right? Sizable bites, if you know what I mean, right? I'm only trying to be realistic in where price is going to go and potentially turn and reverse from, right? And so knowing that this is the next supply zone here, right? Price could reverse and turn like this and go against me, right? But instead, I only targeted this zone here. And I usually target the open of the zone right here, not internally in the zone, because sometimes price just tends to tap the zone here with the wick, right? And then just starts pummeling down like that. And but then a lot of times, right, if my theory is correct, right, in terms of how I enter here, right, then why don't I target the 50, right? Some of you guys might be asking that, right? Well, that's because I'd rather be safe than sorry, right? I would rather be safe in terms of, saying, okay, well, this is where my TP is, but and price is still here, right? And when price gets here, now I'm in the gray zone. Now I'm like, oh crap! Now I wish I could have, take my trade out of here. I wish I could have killed my trade over here or gotten out rather than this high, right? If price was doing this, right? Now I'm really in a danger zone, right? This means I might have to cut my trade off, break even, right? That would have not been good. So what I try and do again is take sizable bites, right? Sizable bite trades, and then just target what I see from this swing low, swing high to this swing low, and there you go. This would have been a beautiful trade, obviously, right? So we're in a 6.8%, right? Okay, so I'm going to get rid of this because we didn't trade that. And now, New York session open. This is the one-shot, one-kill method I was telling you guys about. Let's continue from here. And I'm going to play this right now. It's going to go a little fast. Okay. Obviously, I woke up at this time right here. Okay, let's go over here. Right there. Okay. So let me explain what's happening here. Let's go back on a 30 minutes. So I always start on the 30 minutes, right? So right here, we see that we have order flow bearish right here. We see prices mitigated, right? Price broke here. Now price finally mitigated this high. Now my whole intention is to look for sells because price is bearish. We just mitigated the supply, right? But I'm also thinking to myself, okay, well we just broke this high too, which also gives us the reality here that prices could just come here and then continue bullish like this throughout the day, right? So I was also aware of that. One of the main things you want to do as a trader is to always be aware of where supply and demand is. More importantly, where your direction is, because if you find out where your direction is, you're going to understand that direction is really 50% of the of trading. Because once you find that direction, it's much easier to trade with the direction than against the direction. And I know a lot of people have heard this and have obviously, they're probably telling me, thinking right now, oh yes, we know that. But honestly, I can't stress enough to tell you guys, find the direction. The direction right now for me on the 30-minute is bullish. It's all bullish here, right? If it gets a little too hard for you to understand, just instead of looking at the whole thing, right, because everything is so noisy and you can see everything is bullish, just do yourself the favor by looking at where the current swing point is. The current swing point from now is from this low to that high, right? So that tells us we should be looking for buys right now, right? But not everything is not everything is the same. It's not all flowers and roses here, okay? And what I mean by that is, just because price is bullish here doesn't mean necessarily we should be buying also, right? Although you can, but I'm just saying when we teach you guys at Royal Blu FX, we help you understand both parties. We help you understand where supply and demand is at all times. And once you understand both, where supply and demand is, then it's much more easier to say, okay, well now I see where price is going to go to next. Okay, so in this case, It's like putting the pieces to the puzzle. Okay, it's like connecting the dots. Essentially, so we can see there's supply here, right? And then we can see also there's demand. So now we need to understand, okay, if the major structure is pushing bearish, actually the major structure is pushing bullish. You can see this right over here. We have a complete break of structure, right? So we know we have demand holding here, and price is pushing bullish, but then we have supply going bearish, right? Which means this supply zone can also hold. It could hold, right? But knowing that our theory, the way we teach everything, okay, is whenever demand is pushing bullish, every supply, okay, has to fail. Every supply has to fail. Okay, when prices are going bullish, every supply has to fail. When prices are going bearish, every demand has to fail. It has to fail like this, okay, if prices are going bearish. So in theory, if prices are breaking, or if supply is taking over, you can see supply is in control, then in a sense, every demand has to fail internally right here. Every demand here and here has to fail. Everything has to fail, right? That's what we're looking for. So now that price is mitigated here on the 30-minute, right, and I'm just waking up or whatever, I'm in bed right now, ready to trade, I'm understanding that we just hit a major supply zone. Okay, and if we hit a major supply zone right there, I need to do myself the favor by trading with the trend. Now, the first thing that gave this this trade away here was how price interacted here. You can see right there this is a demand zone, and we had demand coming from here. Price pushed up, right? And then we had more demand that came in here, and now now price failed. This is what we call a reaction point. Okay, right here, this is our flip. Right here, okay, and this is a reaction point right here. Price bought and sold. So naturally, this actually gave it away and told me, okay, well, hey, I see that demand is weak, and demand has to be swept. It has to be swept, right? And supply is taken over. So I did myself the favor of saying, okay, well, let's see how price is responding to this low now. Now that demand was testing here, or was tested, because this is demand and this is also demand, right? I'm trying to see, what is price doing here? Is price going to run up here? And if it does, I'm striking here. I'm going to sell here, right? If price doesn't actually get there, then what am I going to do, right? What am I going to do? Am I just going to, if price doesn't get up here, what do? Do I just watch it and see what price does? I can, or I can act upon this, right? So now, to some of you guys, this may be a little small, but it's actually a nice R&R. That's 5.1%. I'm going to zoom in here and show you how I did this, okay? So right over here, we see that impulse, demand, right? Once demand took over, we see that demand was not able to break the high. We have this is called a weak low, okay? And this is a strong high, a weak low. So now we know right here, price gave up, right? I was not here to enter yet. Price came down just like this. Okay, watch this. Price swept liquidity. In theory, there's like a double top really in theory, because when you do the line chart, you'll see that this is actually a failed buy right there. Okay, so I did the favor of looking at this and I said, okay, well, that's a failed buy, right? This low did not break the high. Price flipped over. So this is the next area I'm looking to sell from. This is a breaker right here. That's a breaker block. And if you guys don't know what a breaker block is, essentially a breaker block is a strong impulsive candle to the downside or to the upside, bullish or bearish, and it closes down here with a imbalance. Okay, it's pretty much a candle that holds imbalance inside like this, and it's a strong candle, right? Impulsive candle that breaks below, and it closes below as a one whole full candle. Okay, so and then we typically look at the low, which is right there, which is the low right here, right? And we take this and we span it across. We take that, and now this is our supply zone right here. There's a highly likely chance that price will actually ever get to this high here, right? Because it's just a breaker block. It induces a lot of people to start buying in here now, and a lot of people think, okay, well, I'm waiting for a sell here, but it's really here because just because. Okay, So price goes up, down like this, right? It plays with us a little bit. Price goes up, taps us in, and I'm in the trade now. Okay, boom, and that's what we get right there. So now I wanted to target this low here just to be safe. However, I was a part of this wick here and this, or excuse me, this candle, and then I was done from there. So, so that was a good trade, right? Now, remember what I was telling you guys about how direction is key here. Knowing that this major supply zone here is holding, and it held, and the reason why it's holding obviously is because price, you can see supply is strong here, supply is strong, demand is weak, demand is weak, demand is weak, demand is weak, right? So this is why I'm just targeting supply, and I'm only looking for supply. So I already did my 50% of the work there, right? And of course price comes here, this is all liquidity here now. You can see this impulsive move here swept all this liquidity, right? So now I'm done. I don't need to hold this anymore. Now of course I could do myself a favor of saying, okay, well maybe I can you know, see where next supply or demand zone is. It's actually right here, to be honest, right there, right? Now I could have held it all the way here, right? But again, referring back to that sizable bites, right? Sizable entry bites or whatever, whatever you guys want to call it. I'm not trying to be greedy, right? I'm not trying to say, okay, price is definitely coming there. It can come there. I want it to come there, but there's no, and this will come after a lot of experience, obviously, is by just knowing systematically that price does this, right? Price does just come there, right? So there, right? Boom. This would have been a great, what, 10.6, right? But I had a nice 5.1% there. So I had, what, about 3 candles pushing bearish there, right? So that was it. That was that for that trade, and it felt good. We made good money on this. Now, watch what happens here. Now, this is where things can get a little rough sometimes, because we see that we have a sell to buy here, and this is a failed supply here that doesn't break the low here, and we see that demand took over. So there's a high likely chance that price can obviously go from here and start running, right? Because we're seeing a low and a high, a low and a high, a low and a high like this. And so this is what I'm expecting, right? However, sometimes, this is my fault, but sometimes I forget where I'm in the market. And maybe this is why I should always be on the computer rather than on the phone, because I do this on the phone a lot. I'm starting to understand that here I'm looking for now for supply to fail, and I want demand to take over. Again, here we had supply weak, demand taking over, demand strong here. So we need to match this demand with this demand in here. So right over here, we had supply right there, right? There was some supply that came down. We had more supply, then demand, then more supply and more demand, right? So this also gave it away too, right? But I can just understand this is a flip entry actually, because the flip happens right on demand, right where demand and supply zones are. So this would be the flip right there. So this is my area to buy from right here. So I'm going to play it here. Okay, it tapped me, as you can see, right? And I was in this trade. I'm thinking, okay, this is great. You know, it's groovy. I'm making money. We're making it rain. I'm going to fast forward this, and you'll see why. I'm going to explain to you what happened here. This was very choppy. It wasn't good. You know, it was just so terrible. I was like, okay. And then it took me out. So in this trade, I actually lost, and, you know, for a good reason. I was anticipating that if I buy this here, I would target the supply zone right here. Okay, and this is why you don't want to trade against the trend, guys. Okay, if I tell you guys about this again, why was I selling here? It's because there was a major supply zone. So I should have been selling, not buying. And obviously buying retracements can be, because this is a retracement, you're buying it from this demand zone that other demand traders are coming here to buy with, right? To buy with this demand. They're thinking that this is demand zone that prices should rise and go above here, right? That's what I was actually morally thinking. However, the real technique here is to not be buying. The real reason, or the theory here, is shouldn't be buying, you should be selling, because that is what price is telling us to do, is to sell. So what we need to be expecting on this impulse here is to see that there's weak demand. We need to expect weak demand, anticipate weak demand, not strong demand. Okay, so there's weak demand, right? Weak demand, weak demand, weak demand, right? You can see that this low didn't actually break the high, and it flipped. So in theory, I should have been selling here, right there. That's where I actually wanted to sell, and price did go above just a little bit. But anyway, I was watching this actually when I was just losing this now. When I was losing this trade, I was actually like, okay, you know, I see it, I could enter from there and continue bearish, right? Of course, you know, sometimes you can't catch them all, right? This would have been a great entry. Then I thought, okay, well, I can enter this. This is when I was washing dishes, by the way. I was saying, okay, well, I can enter from here now and go bearish, right? And then enter from there, right? And then when I enter there, right, I'm going to hold it down to this low. Then I saw this impulse when I was still washing dishes, as this is another entry, right? Again, I didn't enter because I'm washing dishes. How dumb of me, right? So I never took this trade, obviously. I only took the buy, you know, and it is what it is. Never trade against the trend, right? So now we see this is a failed buy to sell. We see that supply is still in charge. It's still strong. You can see this is a failed buy. This buy did not break above the high here. And then it flipped. So now I'm anticipating that price should get back up here, and that's why I'm going to be selling it from here. Okay, let's look at it again here. We see another failed buy. This is a buy to sell. Price mitigated there, continued. Then we see another failed buy to sell. So this whole area right here is your supply zone. Okay, and so this might actually be a breaker. Let me look at the higher time frame. This might be a breaker. Yes, it is. It is a breaker. It is a breaker only because we had a strong imbalance candle right here break the low, and it closed down here. So this would be a breaker block right over here. Okay, let's go back to the 1 minute. Okay, so now as I'm watching this here, I wanted price to get like up to here, but I'm also monitoring the supply zone here. I'm monitoring for a good reason, because sometimes there's two things. Sometimes price doesn't actually fully mitigate. It doesn't go in there and close entirely, right? It just flirts with you a little bit, you know, inducing you, and is another way to tell you about this, right? But the key to supply and demand is to read supply and demand, is to understand it, right? So here you can see when price pushed up. Okay, and the key here is, let me just tell you guys again, the key here is to sell. We're not looking for buys, we're looking for sells. So we see failed buys, strong sells, right? So we have supply there. So I need to do the same thing here internally between this high and this low. I need to look for strong supply and weak demand, right? So I'm going to be targeting weak demand. So as you see right here, what do you see here? This is weak demand. Price rose, price sold off, and this is where I'm waiting for the entry now, because I just saw the weak demand and it exposed itself, right? Boom. And there you go. So it took me what? 1, 2, 3, 4, about 4 candles, right? 4 minutes to take this trade, and that was it. I literally took all this, and that I made what, 6.8% on this. So it was very nice. I was targeting this low right here, to be honest, right there. I was targeting that low, and then anything below is just more liquidity to be swept. But that's it, right? So I did all that within the day, and it felt good. And that's how you guys trade. That's how you should be trading. Okay. Now I hope you learned a thing or two about this, guys. I know the video is a little too long, but I hope you guys learned, and I hope it was valuable. Okay. If you like this video a lot, please throw a thumbs up, and please share this video, because it does help out the channel, guys. And also leave a comment if you guys have anything, any questions, interests, obviously, and I'll be happy to answer them. So until then, guys, I will see you in the next.